Well, it has certainly come that time in which we will bring in tech trader Sean Udell, and we will get his perspective on what's going on in some of these tech names and his favorite names. But first, good morning, Sean.
Good. Hey, how you doing?
I'm doing all right. So let's get your perspective on the NASDAQ overall, where we are as far as your technical indicators, your sentiment indicators, and let's just put that out there for everyone before we dive into some of the individual names that we'll talk about.
Yeah, I mean, they haven't changed that much, and we have, I mean, there has been a, what I would call a whiff of a rotation. In fact, I mean, you know, we actually are seeing some pretty decent rotation action, and the fangs. I mean, Facebook in particular has been very weak. I mean, that stock, you know, at this point, where did that start the year? Is that a loser for the year? I think that is a loser for the year. So you know, but more importantly, you know, that, you know, being, you know, ever bullish on that name has proven to be wrong, and I still think the bulk of the FANG names are gonna kind of end up trading like that. You know, Google hasn't been exactly great. You know, that's probably my favorite of the FANG names, although it'd have to drop a lot for me to get interested. But the sentiment's about the same. I mean, we basically keep having these mini corrections. We talked about this last time. Sentiment gets elevated, but it doesn't get blow off top type elevated, but it gets elevated. Then we have kind of one of these mini, you know, maybe one or two of the FANG names drops. The indices maybe drop, I don't know, 2-3%. And what happens is sentiment actually drops, and it drops quite a bit, and it drops pretty quickly. And so it kind of recharges up, sort of, I guess, for lack of a better term, sort of the machines. And, you know, and then they kind of fire some things high side. But we're starting to get kind of the thing I would say is we're starting to get into a strange market, which actually could be good for a lot of what I like to do. And what I mean by that is, like, we're seeing this really, really strange move in Tilray in the pot stocks. So this reminds me very much of the moves we saw, and I shorted Riot, and I shorted, you know, some other names. I think I was just shorting Overstock Highs. You know, that was a stock I really like lower. But anyway, it reminds me of sort of the hype phase of those stocks. And so, and then what came out of that is most of them kind of blew up. But what you got was, you did get some really good rotation action. You get some really good catch-up trades from cheaper stocks. And so, you know, I know one name we're going to go into is Trivago. Trivago's up, I don't know, 10-15%. I mean, in fact, didn't we do a briefing radio buy of Trivago? I know we did. I can't remember if it was a week ago or 2 weeks ago, but I think that stock's up like 20% since we did kind of an on-air buy of that. But I think what we could see, and I've got some notes coming to this effect, is that the market's probably going to do one of two things. We either are going to have a sentiment blow off top. We could have a big flourish in Q4, where a lot of leftover names have huge moves, almost like a kind of a January effect that occurs in Q4. And we could see the market kind of keep going and keep having a blow off. And you know, that's a scenario that's likely. I'm not sure we're going to get. I think the market sort of had its chance to get a big correction. And again, we can always have a 3 or a 5 or a 8%er. I mean, literally we could have one of those in a week for literally no reason. But the market's kind of had its chance to kind of put in a scary correction, and it really hasn't done it. And so I don't know. I mean, you know, things like that though sometimes happen. You can't really predict things that are unpredictable. But you know, we've had negative news flow, which is my view, which have been sufficient for, you know, certainly something of a 8, 10, 12, 15% correction, and you know, one never occurred. So I guess there's still plenty of people buying stocks that are willing to buy high in the hopes to sell higher.
All right, why don't we talk about Tilray? Get that one out of the way, because I know this is probably in the zone.
No, that wasn't one of the 5 we agreed
I know. Hey.
So, you know, I think we got to stick to script here.
Hey, I don't do that. It's not my style.
Well, I mean, I don't really have a whole lot to say here.
Well, I
honestly, I think I tried to short some like at 88 or 90 or something, and it actually worked. It actually worked. But I ended up eating put spread losses because I think I had a day and a half to cover. I didn't, and I actually had a pretty decent percentage gain, by the way. I don't know. I see some guys out there shorting it. I mean, at some point, I will definitely short this because I shorted Riot, and that was a home run short for me. And I just knew, put it this way, this is one of those things, I don't even know if I need to know anything about the company. I know that might sound weird, but a move like this, that, okay, I know enough about the financial system and the way things, just the way process works for a company to IPO. Generally, IPOs, they don't really come out super cheap. I mean, stock doesn't IPO at like this incredible bargain basement price that everybody in the world should buy. In fact, a lot of IPOs, end up 6 months, 9 months, a year, 2 years down the road, were massively overpriced at their IPO. So either one of two things. Either this was like the biggest mistake ever for all the people that engineered the IPO, and actually, I mean, should Tilray have gotten $80 at the IPO instead of 20 or whatever the IPO price was? I don't think that's the case. I think this is a hype trade. We've seen the hype trade with Bitcoin. We've seen the hype trade with the crypto stocks like Elfin, which I don't even know if Elfin exists anymore. Riot's a $2 or $3 stock today. I was shorting that, I want to say mid to high 40s. I think it went maybe 5-10 points above me, but it collapsed. Again, I liked Overstock up to about 40, 45, 50. It went to 90 something. I mean, I called that a short at the hype cycle. So this is a hype trade. Hype trades are not sustainable. The question is, do they get really, really weird? I would almost say that it's in that really weird phase. But hey, if it can go from 88 to 236, I suppose it could go to 400, right? But usually what happens is there's some signs start showing up, and again, I'll be pretty surprised if I don't make money shorting the stock at some point. I don't know when. I'm watching it. I'm probably 2 or 3 times a day I'll look at put spread pricing on it. I don't know. I don't feel like I need to short it at this very minute. But yeah, it's a hype trade. So I do one of two things with hype trades. Either I completely ignore them because sometimes they're so hard to deal with that it ends up being a huge time suck. And you can easily put way too much focus and money into a trade like this, and it can either mess you up, or you can end up losing really good opportunities on what is your core stuff. So one, I either completely ignore these things, let everybody else mess with them, and usually most of the people that trade these hype trades get hurt anyway. So I avoid getting hurt on them, or I kind of wait until it looks like there's just almost no juice left in the hype. It's like, okay, because a car will run really, really fast. In fact, like if you follow Formula One racing, the very best lap times occur when the cars have their lowest fuel load possible. But they only get 1 or 2 laps at that incredible time with a really light fuel load. Because why? Well, because they're almost out of gas or fuel. So it's the same thing. Stocks sometimes run the absolute hardest right before they run out of fuel, and so this is in that phase. But I don't know where the top is. I mean, if you would ask me, I could have called the top at 88, and I could have called the top at 125, and I could have called the top yesterday, and it hasn't topped yet. So I would say the biggest thing with stuff like this is, maybe kind of do what I do most of the time. Mostly ignore it and focus on whatever you focus on, and focus on the processes that consistently make you a profitable trader. Hopefully you are one. But occasionally the opportunities basically are too good. The risk-reward setup is too good, and it's like, okay, I'll wade in and try some of this. But we're in this phase. The phase, I would say, here's the most important thing. In a market where a Tilray can do what it can do, lots of really weird stuff can happen. And again, this is kind of why I picked the names we're going to talk about. A Trivago could go up a lot. Some other names we're going to talk about could go up a lot. When things start happening like this, stocks that are really, really cheap can have huge makeup trades really quickly. So, again, you don't need to make any money on Tilray, but if you kind of recognize the environment that we're in, a Tilray topping out and collapsing could make good short opportunities in other hype stocks because, again, they all kind of get caught up in the same algorithmic program. Or names that are really beaten up and cheap and that have been effectively kind of the antithesis of Tilray, meaning they've just been sold and sold and sold for no reason, can end up having, if they have any positive catalyst at all, can go up immensely. So, and I kind of think that's the phase we're in right now. So I'm looking for things that I think are just crazily beaten up and cheap and can go up immensely if they produce any good news.
So I would suspect that Trivago, TRVG, would fall into that what'd you say,
Yeah, it's the antithesis
there you go.
It's basically a negative hype trade, right? It's like, okay, so why does it keep going down? Because price is lower. It's like, oh, hey, I'm buying the stock. Why? Because it keeps going up every day. Okay. So why I'm shorting this stock? Why? Because it keeps going down. So, if you believe price is truth, these things, your truth gets changed very quickly on a major catalyst. So the bottom line is, the price isn't truth. What's true is that price is actually highly inefficient in financial markets, and price changes radically. And so, I'm looking for things, and I position myself, and I do so pretty well most of the time on things where price can change quite a bit over short or even medium term time frames. But here's the kicker. I mean, there was another guy, the guy who does the chart stuff. He saw the same chart pattern I did like a week or two ago, where there was like three ways you could have played this. One, you could have just bought it because the chart was actually turning. There was I pointed out there's a downtrend line break. It basically has acted okay since it broke the downtrend line, but it took a little while. But it really started acting good around like 470 to 490. You maybe have an inverse head and shoulders here, but it's what I call my early turn technical trade, where I start getting this stock that starts trading above the EMAs, like the 5 and the 10 and the 20 EMAs. It's put in a base. It looks like these sellers are basically exhausted, and it doesn't really take much for the stock to go up. And, lo and behold, there's good news. And now the buyers are going, man, do I buy this thing 20% above where it was? Well, it's still a very cheap stock. So my guess is buyers will keep coming into it. And I think you and I talked, hey, it's got to get above 5. Okay, then once it's above 5, it can fill the gap. Okay, once it fills the gap, there's not much resistance to 8, 9. Okay, once it goes to 8, 9, and then the whole cycle starts anew, right? You go from a crazy bear cycle to what could be a really good bull cycle. Because again, this thing was dirt cheap at $8, $9, $10. So, and it's kind of typical, stocks that are dirt cheap, it seems like the algorithmic programs tend to take them down another 50%. Super stupid cheap's not good enough. So they basically got to take them down until the sellers are exhausted. And then once sellers are exhausted, you can get a whole new shareholder base come in. So by the way, there was news on this too today that somebody took a great big stake. I've heard of this name. I don't know them intimately. But I think I saw somebody took like a 30% stake or something.
Par Investment.
Par Investment. Yeah, 34.5% stake. It's a pretty big stake.
Yeah, indeed.
They mean business. If you're buying 34% of something, you mean business.
Yeah, 34.5% active stakeholder, for sure. Just speaking of this name.
Hey, by the way, somebody taking a 30. No, hey, it doesn't mean they're going to be right. But again, I've seen that name. They're probably an activist. They probably have deep pockets. They're probably like Elliott, somebody like that. I mean, they're taking a stake like this. They're not aiming to make 20%. Just so everybody knows. I mean, like the guys that were buying Yahoo when I was buying Yahoo when it was cheap, between $12.50 and $20 a share. When I'm like, look, on known assets, the thing was worth $45, $50. Same thing. Guys buying that stock, they were looking for multi-bagger type numbers. And so, I'm just saying, people don't take 30-40% stakes for 20% returns. That's probably enough said.
I know this one caught your eye because in a way it's somewhat of a sentiment trade. This one's been beaten up so much, and that gets on your radar. But what are some of the growth drivers that listeners can point to that would really give this stock some juice?
Well, yeah, I mean, that's the other thing too. It's not so much they've had terrible reports; they just haven't really had they keep missing their growth numbers. And then I think I said one time, before I predicted that Twitter was pretty much going to triple, it's because I predicted that Zillow and Yelp a year or two were going to triple. And again, I wasn't a briefing at the time, but I have documentation of that somewhere. But basically, all that has to do with a lot of these companies is they just have to quit missing numbers. Doesn't mean they're going to triple, but you see that a lot. Companies if they get to a point where they just quit missing numbers, it's not unusual to see an 80 to 150% return. But and same thing, so Yelp did it, Zillow did it. Then I said, look, all Twitter has to do to double or triple is quit missing numbers. That happened. Trivago is probably the same. I mean, the triple probably can easily triple off of 5 if they just quit missing numbers. And again, it's not so much that the reports have been terrible, though. They really haven't. They've just been the growth that was kind of hoped for hasn't really emanated. But there's lots of levers. I mean, there's lots of things. I think, if I remember right, I think Trivago was hurt by a pretty major change in some like how Google. How their web search algorithm runs. It wasn't the same thing. It wasn't the same exact thing that hurt Criteo, the CRTO, but it was sort of the same effect. Sometimes Google changes the way their search stuff works, and so then companies that are heavily dependent on Google searches to direct them to their own properties, can get hurt for a while. And usually that thing gets rectified over a period of months. It usually hurts them for a good quarter or two. But usually, 2, 3, 4 quarters, it kind of gets rectified. They learn how to do whatever they need to do to kind of fit into the new Google search parameters and things like that. But, maybe Trivago, maybe that was one. I mean, what did I just say about, was Tilray grossly mispriced at their IPO? My guess is that probably were priced kind of fairly. Was Trivago grossly mispriced at the IPO? I mean, it did go from like 10, 12 all the way to 24, 25 after it IPO'd, and then it went down to where it went to. So, the bottom line is I still kind of think in fact, probably a pretty easy shot would be just a return to kind of the early IPO trading range for Trivago. But like I said, it's not that I don't think it's that they horribly missed numbers. They just keep missing reports. And so again, missed report, boom, stock goes down. It's like there's not a lot of thought involved in a lot of these trades sometimes. So. But yeah, I mean, I think that's the main thing. I don't even know would worry about, hey, do they need to do something radical to grow the business way more? I think basically they just need to quit missing reports, and they're probably pretty close to doing that.
All right. So,
but this is a travel industry stock. I mean, it's not that hard for these things to catch traction. Global GDP, there are various things that these kind of companies benefit from. But I'd have to look at Priceline. I'm not sure Priceline has done great. Like, this has been a great year for high-priced kind of cult stocks. What is Priceline's booking now? Booking Holdings. So, I don't know if Priceline's had a great year. So maybe there's some industry dynamics too that maybe just some global travel type stuff is not super favorable at the moment. But same thing, that stuff comes and goes. But I mean, to me, Trivago is a secular grower. Over time, they will grow. I like the property. I like what they do. Hey, this Priceline / Booking is kind of taking out most of the competition over time. So there's not that many publicly traded names in the space. I don't know. To me, this is not that hard of a trade if you have time. If you're trying to catch if you've been trying to trade it short term, it's probably been frustrating. But to me, it's a pretty easy call, and a lot more of my position is profitable now, which I like. Although I own some of this quite a bit higher. It's probably, I mean, some of my highest cost basis, I'd probably need, probably close to a double off of 450 to get back to even on some of it. But again, that's some of it. I was buying it cheaper too. And by the way, I still think I'm going to get paid off of 8 or 9. I mean, I wouldn't have bought it at 8 or 9 if I didn't think it was worth quite a bit more than that. So time will tell. But 34% stake, that's pretty good news. Frankly, I'm kind of surprised the stock's not up more. I mean, on news like this, I mean, we've seen other stocks go up 20, 30%. So this is only up 9% on this news. That's the other thing. I'm like, kind of think it could be up more. So if this thing dips at all, I'm probably going to buy some more of it. I mean, you give me 20, 30 cent dip kind of off here, get me back low fives, I'll probably buy it. And by the way, that's not an uncommon trade. That stock finally breaks 5. 5 is a stranglehold a lot of times. Stock finally breaks 5, goes above 5. Well, what's the first kind of easy trade? Well, they shake out the longs, right? They try to push it back close to 5 and make people nervous again. So, a retest to 5 wouldn't be shocking or surprising to me, and I'd relish that. I'd buy more if they give it to me. I'm not saying it's going to do that because this thing could really surge, but if it retests 5 or close to 5, that's not going to bother me at all.
Well, it did have the 200-day to contend with, which is right around that $6 area. It got pretty close to that.
There you go, and they already kind of bucked it back off of that, right?
Yeah, so that's where the overhead resistance comes in the first, and it hasn't been around there for quite a long time, at least, not since way back in April. So it's understandable on a technical level why this one would sell off right around that $6
Here's
area.
a little trading tip before we move on to another name. I like to put 150 and 200-day EMAs on my charts a lot of times. And so again, this is not a holy grail. No moving average is a holy grail. In fact, you shouldn't really trade on moving averages distinctly. You should have other things that you look at. But this is above the cloud now. I like that. So I think the cloud will start moving up. The cloud has been terrible resistance for this name. I think the cloud now becomes support. But it's kind of right at the point where it's kissing the 150 EMA. The 200 EMA is about, it's 680 and falling. So I wouldn't be surprised to kind of see some digestion, unless this news gets a lot of heat, which I still think it could. But let's assume it doesn't gap again and kind of digests. It wouldn't be surprised if it digests between the 150 and the 200 EMA for a while. And then when it gets above the combo of those two things, I've seen stocks just totally ignite. In fact, I want to say that's when Twitter first put in that move from 18 to 32. I can think of a lot of names. I think that was the big Nutanix when it finally broke above that 150 and 200 EMA. You basically saw boom, 30, 40, 50% type move come pretty quickly. So I'm just pointing that out because I might even do some put some buy stops kind of in and around either the 150 to 200 EMA on this thing as well, especially if it takes a little while and it digests and it builds a base again. Because if it rebuilds a base, I think that points to a bigger move. But again, we're in this cycle. If a Tilray can go from 23 to 233, a Trivago could probably double. And we've seen Pandora more than double. Things like that. So if this is the market that's going to kind of get nutty, names like Trivago might finally start acting better.
All right, let's move to a name that I've been wanting to ask you about pretty much all day today, and that is SPWR. The reason why is because you had alerted the audience and whoever subscribes to your notes that you've been looking at this one around the $8-ish level, and we hit that today. So, did you indeed get long SPWR today?
Well, I am long the name. It's that I think that's more for adding to it.
Oh, adding to it. Okay, fair enough.
Yeah, I am long. This one I'm kind of right around break even. In fact, I might be profitable here. I really like this anywhere between like 7 and 9. Here's the biggest thing I'd point out, that the chart pattern, and I've seen this chart pattern work a vast majority of the time, by the way. So this thing has basically been trapped in a channel, or it's been trapped below a channel. The channel's a downtrend channel. The channel right now is something around, what's the price? Then the channel's dropping still. So it's 844 is the bottom end of the channel. 1070 is the top of the channel. That channel goes all the way to the last high of like $40-some. So what they did is they shocked this thing lower. It's been trapped below the channel. It's been consolidated. It does have a very nice base. I mean, it's kind of shown it doesn't want to go much below 650. But I kind of think if this thing breaks into and up through the channel, this thing could be another big surprise. I mean, it's just kind of a weird stock. I kind of think this thing right now should be trading between like 13 and 17. I mean, if I were to just say, hey, look, okay, knowing everything I know about the solar space, knowing everything I know about competition, knowing everything I know about financial metrics, blah, 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 blah. Where should this thing, and by the way, they haven't reported well, they've missed, there's been some issues, but solar's had a fair amount of good news. So right now, it's just kind of a matter of waiting for that good news to translate into sales, which it will. So it's really, again, this is just one of these things where selling begets more selling, lower price begets lower price. But it's almost trading way more technically than on fundamentals. So therefore, I say watch that channel. And so the easiest move would be, hey, if it's pretty close, and it only has to go up about 20 cents now to break into the bottom of the channel. So technicals, what's the next target? The target is a 1 to a 2 point move to get to the top of the channel, and then they probably test it. Right? Then they probably say, okay, we're going to stop you and see if you can get through the channel or not. But like I say, that projects to about $10.50 to $11. So I think pretty easy calls that this thing's at least going to test that $10.50 to $11 area, and then we'll see. We'll see, does it burst through it, or does it get tested, and do they buck it back? If they buck it back, I'll probably be a buyer. But no, I'm long this name. Again, not a bad position for me. Just hasn't done much. Kind of been opportunity cost position. But no, I like it. And again, it's just if we ever get a catch-up trade where we're beaten up, left for dead stocks ever sort of get their due, I honestly don't know how high this thing could go, because it could trade way richer on fundamentals. And again, I do think the solar industry's had plenty of good news. And I do think there's plenty of reasons to kind of believe that, we're getting closer to a point where revenues and things are going to start inflecting higher. So, I mean, SunPower's kind of been a victim of some management decisions they made. They did a big JV with First Solar, where they put a bunch of properties that are big revenue producing properties in a private JV. It's a JV between the two companies. And so it's like they've made it harder to find long-term consistent revenues. It's there. It's in the balance sheets of the two respective companies, but it doesn't translate to clean, good, easy to digest earnings reports. And that's part of the problem with this space. The earnings reports are very messy. There's lots of puts and takes. But what solves that? What solves that is they just get into a better cycle where they just start beating numbers, either more convincingly or easier. And then again, the simplistic traders just trade on the beats. So I kind of think that's what's going to happen for SunPower. They just get into a point where they'll finally have a cycle where they'll start beating numbers instead of missing numbers, and it won't be so hard to realize that things aren't that bad. And this is kind of a misunderstood space. But there's a lot of players in this industry kind of don't exist anymore. They kind of got busted out from a few different things. The financial crisis took out a few names. Lehman's bankruptcy took out a few names. So there's not as much competition in the group, and so we basically just kind of waiting for the group to have a good cycle again. And I think one's coming. And it's not like the results have been terrible. It's kind of been like Trivago, where it's not that the results have been terrible, but the beats haven't. The earnings reports haven't been clean, and the beats easy, and it's been a tougher sell. And in a market where there's plenty of easy, clean stories, I mean, what's the story of why cloud software keeps going up? Well, they keep having clean beat and raises every quarter. So whether they're expensive or not, it doesn't really matter. People keep bidding them up. So in a market where there's plenty of easy targets that are just easy names to buy, that makes the competition for the dollar for SunPower a little tougher. But I think that'll get rectified. But this is a very cheap name. I mean, this is a very cheap name. By the way, I'm kind of a believer in solar. I mean, I'm not a believer in the Solar City model of solar, which sits inside of Tesla, but I'm a much bigger believer in, wafer fabrication, panel efficiency. I mean, to me, it's kind of insane that solar isn't powering far, far more of the globe's electric needs than it is. But it's still a big growing factor in it. But there's lots of reasons why people kind of push back against it: legislation, power companies, all sorts of things. But over time, it kind of just the promise of solar of 2005, 6, 7 will probably be realized 10, 15, 20 years later. Well, guess what? We're in that 10 to 11, 12 year period. So it's kind of like the internet. You had the 99 bubble on the internet. The promise of the internet kind of was an early bust, but all the growth of the internet came through. And I think the solar industry will probably follow a similar path. But disruptive industries are tough trades for 5 to 10 years. They always are. So we'll see what happens. But again, I think more of the cycle right now, without getting too worried about long-term, big glorious growth in the future for these guys. It just, again, if we're in a cycle where a Tilray can go 10-bagger, I think SunPower can probably find a way to go 50 or 60 or 100% in the next few quarters.
All right, before we move away from these two, Trivago and SunPower, I want to address a listener question who asked, what are the financial metrics that make Trivago and SunPower attractive? Is it price to sales?
I don't know if I really have time to get into that right now, but Trivago, you could probably look at more price to sales metrics, which are very cheap. Solar is, hey, it's whatever the people are keen on. So solar is kind of a messy space financial wise. Sometimes they care about certain things, other times they care about other things. So that'd be too long of a conversation to answer. Okay. But Trivago, yeah, you can line it up EB to EBITDA. You can line it up, price to sales. There's plenty of ways to do it, but it's line it up versus the competitors in their space. The other thing too with Trivago is I do think they're now, where maybe around the time of the IPO they were sort of assuming more growth. By the way, the growth rate's still 15-20% on Trivago. That's not a bad growth rate. There are cloud software stocks that have much higher multiples and much lower growth rates than they do, by the way. But what is this thing trading now? I mean, it's I have it price to EV to revenue is like 1 times. I mean, that's really cheap. I mean, by the way, Snap, which I wouldn't short Snap here. Snap trades roughly 8 to 10 times that on the same metric, maybe even higher. There's a lot of ways you can line it up. And again, I don't like getting too much in the financial weeds because that's kind of what I write about and what I key on. So to a certain degree, kind of what I look at is I kind of call it proprietary because I think I look at things a bit differently. But I think anybody can put their own numbers together and look at various financial metrics and make your own decision if you think they're cheap or not.
All right, so the next one I want to talk about is Infinera, INFN. This one is another one, we've talked a lot about it, but here we are sitting around the $7 area. Hasn't gotten a whole lot of juice since it's getting in this range, but to me, the stock looks somewhat a lot like Trivago. Hasn't quite settled in at that $7 area as long as Trivago has around that $4 to $5 area. But what's your take on this one? Are you adding at all to Infinera?
I posted on September 13 that I can't stand it any longer. So I did buy more of this. I did get a decent exit on this. I think I was a buyer of this kind of at gut-wrenching prices a few months ago. And then again, they've had good news. Now, this is one that's real weird. They've actually had really good news. The good news drove this thing back. It basically doubled. It went from 6 to 12. And the news was plenty good to support that move. Again, 6 is, I mean, anything 6, 7, 8 is just dumb. It's just really dumb on this thing. I mean, an M&A takeout value of this is like minimum like 15 to 18. I mean, the Infinera wouldn't even sell. I don't even know if they'd sell for 15 to 18, but that would be like the absolute minimum takeout kind of value for an M&A deal would be 15 to 18. So again, but this market's just weird. It's stocks either sort of trade way above what they should, or they trade way below. There's very hard for me to find stocks that trade kind of at the price they should trade. Now, by the way, you could say, well, most markets, things are kind of like that. But yeah, I mean, most markets, there's plenty of names that are above fair value. There's plenty of names below. But there's also, like, a lot of times there's hundreds or thousands of stocks that trade around fair value. Or the indices are trading around fair value. In this market, like, nothing really trades around fair value. It's either things are, like, gut-wrenchingly below fair value or crazily above them. Right. So again, that's a whole different discussion, but that's just the state of the markets of like the last year or two. But yeah, this is it's just kind of been looking at it. And by the way, I've had a lot of questions on this. Hey, are you buying this at 9? Nope. Hey, are you buying this at 8.50? Nope. Are you buying this at 7.75? No. Well, around 7.10 or 7.20. Whatever the price it was on the 13th. I mean, I posted it, so I think it was around 7.20 at the time, 7.10, 7.20, 7.25, something like that. So yeah, I bought it, added to it, and it's one of the cheaper names in the fiber optic space again. I think the whole reason it's dropped from 12 is that Corient buy. And again, what's funny is I think the Corient buy is a really good buy. So, whatever's going to happen is going to happen, wherever it trades. But I think they've added a ton of value to the company with that potential merger. So, maybe it'll have to go through and whatever, or maybe it'll then not go through and it'll trade like Qualcomm when NXP doesn't go through. Qualcomm goes up 50%. So, who knows exactly? But the bottom line is I think there's a lot of value there. I think this thing's worth 15, 20 all day long. And I'll wait to get paid. And hey, if I do get a 3, 4, 5 point move on it again, I'll take some off, just like I took some off before. But I'll keep at least half my stake, if not more. It kind of depends how fast it moves. I mean, if I got a big $2, $3 move like in 5 days, I might take a bigger chunk of it off. But we'll just kind of see what happens. Again, it's just too cheap. It's too cheap. I'll sit on it. If I have to. If it goes lower, I might buy more. But at $7 and below, I kind of almost had. I literally kind of made myself buy some, and that's what I do sometimes. Sometimes I literally had to make myself buy some Cloudera at 14 and below, and I'm glad I did. And that ended up working really nicely. And so I think this is kind of the same deal. It's an anti-Tilray, put it that way. There's nobody else on the planet really seems to be interested in this name except me right now. But that's okay, because when people do get interested, I think it's going to trade a lot higher.
All right. How about Dropbox, ticker DBX? What's interesting about this one?
Well, same thing. I mean, I was long this at 30, which I thought was a decent buy. I think I scrubbed the trade. Right. I think this is one where I think I scrubbed the trade like literally days before it had that big crazy spike. I do think I kept like a third of it. I think I kept a third of it. I monetized a third of it. I think I caught about 6 or 7 points on like a third of it. But I scrubbed like most of my position before they had that big spike. But I didn't mind it at 30. And then I had an opportunity to buy some a couple months ago, or whenever that push down to 27 was, and I even felt, I'm like, yeah, if this thing goes 27, 28, I should buy some, because I think it's gonna trade again, like 31, 32, 33. I didn't do it, and that's exactly what happened. But then I was just looking at it the other day, and by the way, there should be a posted buy of this too. I was looking at this the other day, and I was just like, it just kind of feels good. It just kind of feels like it's not really going any lower. They've kind of rated it again. There's an IPO lockup coming. You know, I do like to do that, by the way. Like, I like to buy, you know, in and around in front of an IPO lockup. By the way, I mean, they could drive it down lower. I think I bought about a third of what I want to be in this thing. If they drive it crazy lower, I got plenty of room. But you know, and then I got to watch for the exact date. You guys might have this, by the way, the date of the IPO lockup expiry. I haven't looked at that, but that's coming up fairly soon. And I kind of think, you know, after the expiry, I think we could see this thing trade better. So it's kind of a mini version of Nutanix. Nutanix went down way, way more, but a big reason Nutanix was getting rated was pre-IPO lockup. And then guess what? After the IPO lockup raid, Nutanix went higher. So you know, that doesn't work on every name because a lot of times you don't get these big nasty raids in front of IPO lockups. But yeah, this kind of just feels like an engineered. They're just kind of beating this up because they can. And so, hey, I'll scoop up some lower prices, and you know, no guarantees I'll make money, but I'd say I got like 75-80% odds I'll get a profitable trade out of this. And by the way, I might add to this because it kind of feels like they might try to push and break the prior lows. And if they do, you never know. Maybe something really attractive like at 24, 23, 22, or 20 comes in. So you know, I'll kind of evaluate then. But if they want to give me crazy prices, I'll get larger than I ever planned to get in it. So I just don't know what's going to happen. I don't know if they're going to really make this thing really attractive or not. But you know, I don't think this is a bad name. I don't think it was a grossly overpriced IPO. It's shown the ability to spike a couple times. I do think they're a way better name than Box. And Box has had a lot of kind of quote-unquote media hype. You know, a few people kind of with, with some notable kind of, what do you want to call it, cred, media cred, like Box. I actually think Dropbox is far better property than Box is. So over time we'll see. By the way, Box traded pretty bad for a while. Box was a very good buy. I liked Box at one point. I want to say, was it a $10 stock? Here, let me look. If it wasn't 10, it was close to 10. And when Box was that beaten up and cheap, I did like it. Yeah, it was. The problem is it was early 16. And in early 16, there were just so many names. It was such a I mean, hey, I was buying Splunk between 32 and 36 in early 2016. So I think what I did with Box, I just felt like there were so many better names that I could buy that were selling as stupidly cheap that I opted for. I mean, that's when Light, for example, was trading between 18 and 22. I mean, we could go on. I mean, that was really, I mean, you had a tech crash, which nobody recognizes as a tech crash. But anyway, I did like Box back then. By the way, Square, somebody could have bought Square for $10 and cheaper way back then. That was a huge mistake. I should own some Square. I should have been from some Square since then. I think I traded that out, made some trading money on it, and kind of messed up on that one. But anyway, so Dropbox, interesting name. I think IPO lockup's pretty close. That's probably putting some near-term pressure on them. I think they've reported okay. So I think the earnings reports have been pretty good. And, you know, they have a big TAM. I mean, that's the thing. I like companies that have large total addressable markets. And they have a large total addressable market. And I think there's plenty of ways they can win. There's plenty of people in the space, but there's also huge needs for data storage, personal data storage, and enterprise data storage. So, you know, I mean, by the way, people forget, Box is one of these unicorns. I mean, they stayed private for a long time. In fact, that's the only thing. Had they come public earlier, I would have liked them probably more, because they grew a tremendous amount as a private company. So they're past the hyper growth phase of likely of their business, but that's okay, because again, I don't think you're dramatically overpaying for Dropbox here. I wouldn't be interested in the name at 36, but at 26 it's more attractive.
All right, now the last one we're going to talk about is ticker PI. Is that Impinj?
Yeah, it is.
So this
is. It's my hated name that I never gave up on, and you know, they had a big move just recently, And this is one, I'm going to say this is more of a technical trade. I am not an expert on Impinj. I generally know what they do. I kind of know what their drivers are, but I don't know that industry. That's one subsector of tech that's very specialized. You know, that's the RF micro type, you know, tracking of inventory, you know, very, very small chips that basically, you know, help in the analysis of inventory management and whatever else they do, right? I know enough about that kind of that area to be dangerous, but the one company that's kind of dominated that space has been Zebra Technology. A lot of other sometimes small startups have kind of come in with solutions that look good, but they're not durable. So that was always kind of my concern with Pi. But yeah, their technology roadmap looks decent enough. But to me, this just looks like kind of a good technical setup. And you know, this thing probably got, you know, crazily oversold too. It probably made sense that it went, you know, well, by the way, that maybe this was a mini version of a, you know, should this stock have ever traded at 60? I would argue that early on Pi was a hype trade. And look what they did. They crushed the hype trade, went full circle. I don't know if this should have ever gone much below 18 to 20, but man, they sure took it way below that. And then again, so there you go. There's your overshoot. I did not buy any of that back then. I kind of regretted being in the name. I was kind of worried about it. But this is one where my stubbornness might pay dividends. And now I kind of think it looks like it clearly wants to go higher. It's had another nice, decent little pullback off that spike. You know, I'm probably a willing buyer of weakness much below. See, now it's easier too. You know, you don't have to worry about catching every tick and every high and every low, but I look for markers. And now, you know, you got a pretty good marker at 18 with good support. Look at that big burst move off 18. Okay, well, now you get a high marker. It didn't want to hold 27. But a break of 27, especially if an overnight or an overweek hold of 27, that tells me something. So, you know, that's probably something the stock has to prove. But now, the lower it goes below 27, the more willing I am probably to add to this. And you know, I could beat myself up for not being a buyer of 10, but guess what? I didn't do it. The past is the past. I got to move on from the information I have now. And by the way, I didn't really like the name there. You know, I was sort of like, I should never been involved in this name. Well, now I'm learning more about it. Maybe the stock is a better company than I thought it was. And a regretted buy might turn into a happy hold, right? So the bottom line is I'm getting more information. The information now I'm getting I like. I mean, this is a really good chart. I mean, I really like this chart. This is a very unusual pattern that usually results higher. Again, no pattern is 100% worthy, but in my technical system, I do a lot of programming, my own kind of version of algorithmic trading. This is a very high probability setup. So, you know, again, I kind of hope it drops. I kind of hope they kind of retest something in the 19 to 21 area. And, but you know, this might even be a buy stop above 27 too. I mean, so this thing can trade really crazily. That's the other thing though. Former hype stocks that get their growth going again generally become kind of loved again. So, you know, if they want to run this thing, this is a name they prove they can run. So if this thing gets going and gets good earnings reports, and by the way, I think the last earnings report was much improved. That was the big move off of like 12. So the 12 to kind of 20, low 20s move was, I believe, off of an improved earnings report, which that's another piece of evidence I like too. So again, now here's the caveat. I'm going to say, so we just talked about 5 beaten up kind of cheapy plays. If anybody that puts a bunch of money in any one of these things ends up losing the money, it's their own fault, right? So these are all names. I would say I put way less money in these types of names than I do things like Qualcomm and Twitter and things that I talk about more favorably. So, you know, this is kind of what are we kind of calling today? 5 spec names today. Dropbox is a pretty big company. They got a big revenue base. But you know, I mean, these are not like my 5 favorite names. Just so we don't confuse anybody.
All right, and if you had to buy one stock today, this is the last one for you. If you had to buy one stock today, which one would it be?
Well, I just don't do that. So my answer to that is I would say don't buy one stock today.
Hey, stay on point.
Well, but
I know.
that's not
I
me.
put you on the spot.
So, and I would say the best thing I can say is that if that is how you think about markets, then you want to change your thinking because you the vast majority of people I've seen who trade with that mindset are boom bust blow up traders. So you want to think that every trade is roughly equal, no trade is that special. You want to build a process, not hit a home run. And by the way, the very best hitters hit plenty of home runs. But the people who are poor hitters still can hit some home runs. But the if you're a poor hitter but you hit occasional home runs, you don't have a very good career in baseball. Same thing with stock trading. The better hitters hit a lot more home runs anyway, but they also make plenty of money hitting their good hits. So yeah, I don't really buy into that philosophy of any one. So I mean, I can talk about my two favorite themes are which again we're off topic of today's, but fiber optics, 5G. I mean, I would say that my two strongest themes for the next year, especially because I think they're going to be counter-cyclical and they have easy comps in a world of tech of tough comps, is fiber optics and 5G.
All right. Well, I know the answer anyway to my question. That's be Qualcomm, right?
I don't know if it would be one. That would be my single favorite 5G play. That's for sure.
All right. Well, I'll get you out on that one anyway. So sometimes I like to pin you in the corner just to get your reaction.
Well, you can try.
And I did, and you still fought back. No problem. All right, Tech T. Well, as always, it's been educational. We did get some good stuff out of you, though. SPWR. Although I did miss it. Did you add or did you not?
Yeah, I think there was a posted note on that a while ago.
No. I mean today, because this was your stop, your buy stop.
Oh no, I didn't buy any today. But I bought some. I don't know, somewhat recently. I'm trying to think. I mean, a lot of the buy stops I'll point out. Doesn't mean I'll do them all, but I'll point them out. And if other people can benefit, great. I think I bought some a little lower. I've got about 3 or 4 trades on this name. So like I say, this is a good little point. This is a good little point on the chart. The channel. There's a channel that I pointed out. Maybe in my next note I'll put my weekly chart up, because I think if you look at the weekly chart, this thing looks pretty compelling. And I think a lot of times people look at short-term charts too much. By the way, I mean my favorite chart is just a daily chart. So a day-to-day chart that look at 8, 12, 14 months, something like that. I probably should look at weekly charts more often, but I do look at them a lot. I look at them multiple times per week. The chart really that's the most exciting on SunPower isn't a short-term chart. It's really the weekly chart. So I'll see if I can post that up later or tomorrow.
All right. Well, I did, as a last-minute change on the chart, is put the weekly chart up. So if anyone is paying attention or reviewing this one on their free time, I do have the weekly chart up, and they can take a peek at that. And yeah, I see it. Nice breakout. Testing the 50-week moving average today, the simple moving average. So I guess the next line in the sand would probably be around that 950 area.
It is, and well, it's again you got a channel, so you got a very, very powerful, long-winded kind of downward channel that the stock's getting pretty close to the bottom of that channel. By the way, the bottom of the channel has been sort of a sell trigger, and if that breaks, then you've got again that's where I talked about where you have that potential move to 70, or not 70, to the upper trend, which is what is that, 1150, something like that. So it's just an interesting setup. But again, I think sometimes people can look at these things. They look at the short term a lot. Sometimes you got to kind of be mindful and look at a weekly chart, and you don't want to look at a weekly chart and just say, oh, hey, it went to 40, therefore it can go to 40 again. I mean, that is not really relevant. I mean, you could look at a lot of stocks from 1999, and stocks have no chance of ever getting back to those points. But first things first, look at the channels. Look at the trend lines. Put targets up. You got some easy targets there. But these are cheap stocks. Cheap stocks can move a lot on catalysts. I mean, what Pi was at 47%, I think, intraday. It didn't close up 47%, but it was up 47%. Trivago's had a 25% move. A lot of that occurring, and really 2 big days have accounted for that. So these cheapy stocks can put in pretty good moves especially on good news, firm good news especially.
All right. Well, let's leave off right there because we got a lot to digest and a lot of good ideas, good names, and what have you. So why don't we end it, and we can reconvene if something happens Friday or so, or early next week. Sound good to you?
Sounds good.
All right. Well, as always, feel free to hit up Tech Trader with any questions on the Talk to Us button, and if he's not on air to address it, he's usually pretty good about getting back to you. So, all right. As always, my man, thank you so much, and we will talk again in the very near future.
Have a good one.
You too.
Micron reports tomorrow. That could be a pretty exciting report.
All right. Well, if it is indeed exciting, we'll get you on and see what you're doing with it.
All right. Sounds good.
All right. Thanks a lot.